Hello, everyone. Welcome to Crypto Unlocked. I'm your host, Crypto Daryl, and we got to discuss a few things about Bitcoin. Now, on March 24, 2025, Cathie Wood of ARK Invest made a bold statement during a Bloomberg interview. Now, she was predicting Bitcoin could hit $1.5 million by 2030. That's a massive claim, but could it actually happen? I mean, I've been in the $1 million Bitcoin camp for a while now, and I'm confident we're heading there. It's just a matter of when. For Bitcoin to evolve for a potential gold 2.0 into a true digital age equivalent of gold, complete with a $1 million price tag, what needs to happen with global monetary systems and technology. Today, we're peering into a future of imagining a relatively realistic scenario of how the dominoes could and might fall over the next few years, making this a reality. Now, let's start where we are now, spring 2025. Bitcoin's sitting at mid 80,000 range as I record this. GameStop's recent move to adopt Bitcoin as a treasury reserve asset could be a game changer. Now, sparking a wave of corporate FOMO just to try and get it in the market. Companies like AMC and Chewy might jump in, and as GameStop stock outperforms most others throughout the spring, more big players follow. Then after weeks of rumors, a Magnificent Seven company, let's say Meta, whose CEO Zuckerberg famously has a goat named Bitcoin, announces it will be adopting a Bitcoin reserve strategy. Now, that'll be swapping 10% of its 77 billion cash pile for BTC. Retail FOMO kicks in hard. This isn't just GameStop, it's Meta. Bitcoin surges to $150,000 as global money flows pour in. Suddenly, prices below $100,000 feel like a steal, and everyone's kicking themselves for not buying early. By fall 2025, Bitcoin's hovering around $130,000. Then on October 15th, the gavel drops. Senator Loomis' Bitcoin Act passes Congress, and President Trump signs it into law. After tough negotiations, the U.S. Treasury is ordered to swap a portion of its gold for 300,000 Bitcoin over the next 3 years, building a reserve capped at 500,000 BTC. While some hoped for a bigger swap, the U.S. government becoming an active Bitcoin buyer sends shockwaves through the markets. Now, combined with a Q4 supply squeeze, Bitcoin rockets to 250,000 by the end of the year, while gold crashes 10%. China, feeling the FOMO, starts eyeing a similar move. Fast forward to 2026, the year of the nation state, the U.S. has called for the world's bluff, and other countries scramble to adopt Bitcoin strategies. Now, Brazil's already talking about it. Rumors about China and the Middle Eastern nations are on board as well. Bitcoin's volatility is in full swing, correcting 30% to 108,000. Panic sets in. People think 250,000 was the ultimate peak, fearing a drop back to 20,000. But Brazil halts the panic with a 70,000 BTC reserve announcement funded by $80 billion trade surplus. Abu Dhabi adds another 100,000 Bitcoin to its stockpile, and Japan joins in by buying 80,000 BTC through a low-yield bond sale and swap of gold. Bitcoin's traditional 4-year cycle breaks. No brutal bear market correction this time. The big players are here to stay. Smart money front runs the nation state buying frenzy, and after retail FOMO buys to the top again, Bitcoin hits 400,000 by Q4 of 2026, reaching half of gold's total market cap. Now let's take a look at 2027, a year of sovereign debt crisis, where banks find a lifeline. U.S. debt balloons to 40 trillion, with interest payments becoming the largest nation's expense. In China, local government defaults spike as the real estate crisis deepens. Italy and Spain needs hundreds of billions in EU bailouts. Government turned money printing to paper over the cracks, driving global M2 money and supply and inflation higher than Bitcoin. However, hold steady at $300,000. Commercial banks are worried about sovereign default risks, need to de-risk their bond-heavy portfolios. JP Morgan, once a Bitcoin skeptic, pivots first, swapping 2.5% of its U.S. treasuries for $40 billion in Bitcoin. Goldman Sachs follows with a 5% swap worth of $125 billion. Then SoftBank and HSBC and other banks join in. By year end, banks collectively allocate $500 billion to Bitcoin, pushing its price to $600,000. It becomes common knowledge that every financial portfolio should have at least 2% Bitcoin allocation, something BlackRock is already advocating for. It'll just take others a bit to catch up. In 2028, with major players stacking, Bitcoin's fifth halving in February comes into focus. Miner production drops from 3.125 BTC per block to 1.5625 BTC every 10 minutes. Anything below 500,000 feels like a bargain. Crazy to say now, but just wait a few years, a new player emerges: artificial intelligence. By 2028, institutions, banks, and every retail investor uses autonomous AI programs running 24/7, strategically buying Bitcoin. These AIs front run each other, figuring out in months what took humans decades. Bitcoin's network, backed by the computing power and electricity. It's the hardest money for the digital age. Not owning some puts you at a disadvantage. The 2028 halvings impact hits in just 30 days instead of 6 months. Miners can't dump enough supply to matter. Bitcoin reaches $850,000 by mid-year, briefly surpassing gold's market cap for the first time in history. By 2029, the world is still reeling from the 2027 debt crisis. Major economies owe unpayable mountains of debt, and everyone knows it. Central banks like the US Fed, ECB, Bank of China, and Bank of Japan have kept the money printing game going, but it's failing. There's nowhere left to hide. Cash and stablecoins are still used for transactions, but fiat is a losing bet for savings. Gold is nice, but stagnant. Bitcoin emerges as the obvious digital age life raft. Central banks make the same calculations commercial banks did earlier. Early movers like the Czech Republic Central Bank are already in. But now the big players step up. With government's bonds losing value and yields and spiking, they're seen as a bad bet. The US Fed moves first, followed by the Bank of China and ECB. They don't dump bonds, but hedge with Bitcoin, just as they've done with gold. The Fed's pivot pushes Bitcoin past $1 million for the very first time, cementing its status as the world's most valuable asset by market cap and the new base layer for the global digital economy. The only truly neutral cryptocurrency there is. All these events, corporations, nation states, central banks, and AI are what's needed for Bitcoin to soar past $1 million. What seems far-fetched sounding right now is actually what's happening right now would have seemed far-fetched 5 years ago. People said Bitcoin would never break 100,000 back then, yet here we are. If you would have told someone in 2017 or 2020 that the US would have a strategic Bitcoin reserve by 2025, they would have laughed you off the stage. But it's happening right now. The world changes faster than we expect, and that pace is accelerating with technology. Those not participating will be left behind. Could this timeline play out in the next 5 to 10 years? Absolutely. It's a speculative scenario. Maybe some of this won't happen until the mid-2030s, but the key takeaway is the odds of something like this unfolding are higher than you might think. Most people didn't expect any of this to happen, yet it has. Cathie Wood's $1.5 million prediction isn't as crazy as it seems. I believed in $1 million Bitcoin by 2030 for years. If you buy into that, this could be one of the easiest ways to 10x your investments of your life. Sure, there are wilder predictions like Michael Saylor's $13 million or $49 million Bitcoin, but those aren't happening in our lifetime and should be taken with a grain of salt. $1 million Bitcoin, though, it's not absurd. It's definitely not absurd as it sounds. Tell me down below what you think Bitcoin could actually be at by 2030. And if $1 million seems a little bit too far-fetched. Thank you so much for tuning in. I'll see you on the next week. Have a good one.